I hate rooting against the U.S. economy, but that's what the bulls have to do going into tomorrow's non-farm labor report. We're so obsessed with what the big picture data might mean to the Fed that it even controls the action during the single most important week of the earnings calendar. Fortunately, today went our way with the Dow gaining 322 points, the S&P climbing 0.91%, and NASDAQ jumping 1.51%. But I think that's because we could breathe a sigh of relief that the Fed meeting was now behind us, or else we wouldn't have gone up. Why do we have to hope that tomorrow will bring a weak employment number with fewer jobs added, more modest wage growth? Because after today's beautiful absence of what we call macro numbers, the Fed obsession will start anew. Should they have left the door open for a raise? Should we have signaled a cut? It's all we talk about. Think about what happened yesterday and today. Let's start with the AM before the Fed meeting broke up. We had a not-so-hot market. It was pretty ugly. Why? Not earnings. No, we were down because people worried that Fed Chief Jay Powell might lower the boom on the stock market by saying something hawkish. There were rumors that he might indicate he favors raising rates, not cutting them. This new narrative alone is an incredible thing. We're once again hostage to everyone's worries about the Fed, which is another way of saying everyone's worries about inflation. There have been some moments where we see a consumer price index number that's boosted by one or two items, and it makes for a whole overpowering wave of pessimism that takes down everything. Doesn't matter if that thing is just insurance or utilities or rent or food. Whatever line item impacts the CPI, it's going to drive down a stock like Microsoft, largest company on earth, to ridiculously low levels right before it reported. One of the best quarters I've ever seen. It actually reversed all of that gain. Every day, practically every stock is caught up in this weird notion where we hang on every piece of macro data, every public statement by a major Fed official, regardless whether the company itself underneath the stock is impacted. Even when Apple reports a better than expected set of numbers after the close, like it did tonight, sent the stock higher in after-hours trading. I have no idea how long that can last if we get an overheated employment reading tomorrow at 8:30. Wall Street was terrified that Apple iPhone sales would collapse, especially in China. And while they weren't great, down 10%, it could have been a heck of a lot worse. Hey, it doesn't hurt that CEO Tim Cook predicted a return to revenue growth in the current quarter, along with an additional $110 billion buyback authorization. I think there's a lot to like here. You know, I say own it, don't trade it. But that only matters on days where the big picture data let it matter.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.